everyone, and welcome to this month's installment of your Daily 5. I am your host, Mish Schneider, and as always, like to thank Rachel Ackley, our producer, and StockCharts TV for giving me this opportunity to speak to you each month. So considering everything that's gone on with the market and how volatile it's been, to me, the most interesting thing that happened this week was that the Russell 2000, which was the index that really started the ball rolling as far as the downside, back in November, even before the other indices, may have found not only a bottom, but a triple bottom if we go back to areas that it held around that 190, 188 to 190, going back to 2021. So if that's the case, now is a good time to take out a list of stocks and ETFs to buy, considering that if the market has truly bottomed, there's plenty of opportunity. And that's what we're going to talk about today, is the top stocks on the shopping list. Here is the list of the symbols that I'm going to cover. Let's go to the charts. Okay, so let's start with a retail stock. I wanted to find one that was actually outperforming, and I like this stock, Capri. It's always been one of my favorites. It's a great stock to buy on dips. And interestingly enough, while the market was crashing this week due to the Russia situation, this didn't even break down under its 50-day moving average. So you have the furthest risk to under 62.88. You're going to have some resistance, obviously, here above 70 and 73. So I would position size with a risk to under the 50-day moving average. But I would also raise my stop if the market turns over to, let's say, under the 65.97 or the low of the day I'm talking to you. This is totally outperforming the SPY. Momentum is not great, but at this point now, if the stock continues to go up, we may see that catch up. The next one has been on my favorite list of stocks for a long time now, and this is MP Materials. It actually reported earnings this week. You can see the momentum is clearing the 50. It's outperforming the SPY here. And now we're getting a second move over this 50-day moving average after it broke down below it. So at this point now, I would say probably your tightest risk is to under 39. If you really wanted to sit with it for a more of a swing position, then you could either risk to probably under 37. But I started out this year saying that I thought this stock could be a double. I still believe that way. Obviously, if the market falls apart, you have to adjust your strategy, but nonetheless, MP sits as rare earth minerals still is something that we need tremendously for all types of EVs and alt energy. The next one was not necessarily something I thought about until I saw this beautiful pattern here, and I did my weekly stock charts on signs of a bottom, exhaustion gaps, and island bottoms as being one of them. And so what's happening here right now is that with the Russian news yesterday, this thing had a big collapse, totally reversed, gapped up, now leaving this exhaustion gap. So it's not quite outperforming the SPY yet, but it's getting close. And what's interesting is that we're also getting a mean reversion trade, which I talk about a lot in my weekly charts that I do. And that's because it's taking out back over the Bollinger Band on our real motion indicator and over the Bollinger Band here on price. So to me, this is another situation where you could very simply risk should not fill this gap. So in other words, it should not get below 72.87. So I might say 72.99, risking about $1 here to see if this thing can get up to 75, 77. This is a good opportunity because I really like the risk reward. If you only risk that $1, really you can probably make at least 2 and maybe more again if the market has truly bottomed. IHI is the medical devices sector. Now, I've talked a lot about this on media, and we could see right now that this too had a startling reversal pattern, as did so many things yesterday, well outperforming the SPY. Also here, real motion, not quite great, but certainly has come back from the doldrums down here. And I think if you look at this chart, we do have some resistance up here, but nonetheless, I like this particular instrument longer term, particularly if we can get through this 59 level. There's a good opportunity here to see if we can actually make a move up, get back up to these moving averages and beyond. Medical devices is something I've done a whole weekly video on a few weeks ago. Now, JB Hunt, I wanted to give you something in the transportation. Now, JB Hunt is also here, not above the 50, but above the 200, but has tremendous amount of support down at these levels here at 184. We're $10 higher now, but you can see that these support levels have held up. And we had a good outperformance here of the SPY, momentum starting to improve. The only thing I would say about this is with the 50-day moving average so close, I would keep this on my shopping list for next week. I'd like to see the 2 closes over the 50, and then I think you have a good opportunity to see this potentially go up much higher. Now, another one in terms of the high oil prices has been TAN. This is not the right chart. Hold on. Now with TAN, same thing, startling reversal pattern yesterday, obviously in a bearish phase and still has a lot of resistance to clear here over the 50-day moving average, but it's off to a good start. So if this thing can hold up above this 65 level, even let's call it 63.50 level, it also is outperforming the SPY. Momentum is actually starting to improve, and if the momentum clears the 50, and even if you wanted to be super conservative and say if this can clear the 50, I think solar energy compared to the prices of oil is still a great opportunity and could actually really play some serious catch up. I also wanted to give you something from emerging markets. Now EFA is sort of emerging markets, but this one has done much better. This is Greece. Greece I call the sleeper trade of 2022. Obviously it came down with the market yesterday, but held some critical support. We're in a bullish phase. It had a golden cross here a few weeks ago, and now it's gapped up after this big down move here. This is the kind of thing where we're already involved in this market, but if this can take out 30 from a longer term standpoint, I think this too is going to be a tremendous trade as we get through the rest of the year. Then switching to the metals, I wanted to give you two. One is just general XME. This is metal miners. This actually includes steel, which is up tremendous today, up over 8%. And right now, 50 obviously has been a big key factor. You could see again when the market went down, this barely budged. And even though we're so close to the highs here, if this thing takes out the highs, let's just take a quick look at the weekly here. If we take a look at the weekly chart, we're really at new highs here. I think if we go back further, let's go all the way back, new multi-year highs, let's put it this way. So at this point now, if we go all the way back before the crash in 2008, this traded up to 79.72. So it's very possible with this type of sideways consolidation that has gone on for like a year, the fact that we're getting over these levels right now, you could see XME go much higher as well. And finally, I want to give you gold, because even though gold is choppy and all over the place, I still think that gold here is going to continue to go higher. This is still the type of situation where you sell the rallies and you buy the weakness. As long as it holds above this 50-day moving average, I still like it. If we take a look at the weekly chart in gold, okay, if you see the weekly chart in gold, you have a really nice breakout here from a flag. If you took the high to this high to this high, this is broken out. So really you can even say 172 is your area to hold. And if we go back to the daily chart, it looked like we were having a major reversal pattern yesterday, but so far we're inside that today, the range of yesterday. I would say let's give this a little bit more time. And if we can get a close, even on the Friday as I'm talking to you, above 177.15, this is probably worth getting into. You certainly haven't missed the boat. Okay, so that gives you a cross section of areas to be looking at. I hope this was helpful to you. I hope you have a great day, a happy weekend, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.